The housing market slowdown is officially upon us. This is because virtually every single housing market stat is showing a housing market shift across the United States here. This is actually according to the latest report from Redfin that I'm going to be sharing with you guys today. This is pretty remarkable because every single housing market stat is basically pointing to a housing market slowdown. So I'm going to be sharing this report with you guys. Hope you guys get a lot of value out of today's video. And of course, if you do, please hit the like button and greatly appreciate that. Also, consider subscribing as well. I post the latest housing market trends so you guys can make a more informed decision about whether to buy or sell a house. So with that said, let's go ahead and dive right into the video here. This was just published by Redfin yesterday at the time of this video here. And here are their key housing market takeaways for 400 plus US metro areas. And this data covers the 4-week period ending July 3rd of this year. So take a look at this. So the median home sold price was up 13% year over year to $396,000. And this growth rate is actually down approximately 3 percentage points from March's peak of 16% year over year. So the peak this year, home prices increased 16% year over year, and that was set in March, but now we're only at 13%. One thing I want to mention is that this growth rate of 13% is still high historically speaking. Historically speaking, home prices gain in the range of 3 to 5%, and of course, not 13%. However, though, this is a step in the right direction, though, because we're coming down from the peak we saw this March. And here's another key stat, and this is a leading indicator of our housing market. This is the median asking price of a newly listed house that actually increased 15% year over year to just under $400,000. But this is down 2.1% from the all-time record high that was set during the 4-week period ending June 5th. So to briefly recap here, the median sold price decreased 3 percentage points from the peak we saw in March. And also the median asking price for a newly listed house is down 2.1% from the all-time high as well. And here's some graphics to share regarding this. Again, the median sold price only increased by 12.5% year over year. But as you guys can see here, really ever since mid-May, home prices have basically plateaued. So even though home prices are up about 12.5% year over year, it's still a step in the right direction that basically home prices have been plateauing. Again, this is a lagging indicator because this is based on contracts signed approximately 1 to 2 months ago. Because it takes approximately 30 days to sell a house once a seller accepts an offer from a home buyer. But what's an early indicator of our housing market is the asking prices of houses that are being listed for sale. But as you guys can see here, asking prices across these 400 plus metros has basically been on a downward trajectory ever since basically mid-May. And in stark contrast, look at 2021. In 2021, starting in May, the median asking prices was basically flat through the remainder of the year, basically until November. But right now, the trajectory here is basically going downward. Also, speaking of housing affordability or lack thereof, the monthly mortgage payment on the median asking price home, again, this is a calculation based on asking prices right now and also based on current mortgage rates. That actually hit $2,342 per month at the current, keyword current, 5.3% mortgage rate. That's actually up 40% from basically $1,700 from 1 year ago when mortgage rates averaged 2.9%. This is actually down slightly from the peak of $2,000, basically $500 that we reached during the 4 weeks ending June 12th. And here's a graphic depiction showing home buyer mortgage payments. Again, up 40.4% year over year, due to high mortgage rates and of course, record high home prices that we've been seeing. But over the past couple of weeks here, this payment here, or the average payment, has been on a downward trajectory because according to Freddie Mac, the average 30-year fixed rate mortgage has been declining for 2 consecutive weeks. And on top of this, the median asking price home has also been decreasing as well. And that's why we're seeing this decrease in the home buyer monthly mortgage payments. But as I mentioned in my previous video, current rates right now are not 5.3%. Current rates as of today, which is the 8th of July, are approximately 5.8% and not 5.3%. This mortgage rate of 5.3% is per Freddie Mac based on a weekly survey. So right now, according to the Mortgage News Daily, average mortgage rates are approximately 5.8% and not 5.3%. Okay, let's talk about pending home sales, which of course is when a home seller accepts an offer from a home buyer. Let's talk about pending home sales, new listings, and active listings, which of course is housing supply. So pending home sales were down 13% year over year, the largest decline since May 2020, which is basically just after stay-at-home orders across the nation here. So pretty big decline compared to 1 year ago. In stark contrast though, new listings were actually down 1.4% from 1 year ago. And active listings, which is a number of houses for sale at any point in time, fell 2% year over year, the smallest decline since October of 2019. But a better way to show these trends is to have a look at these graphics here, because this is pretty remarkable. So again, pending home sales are down 13.5%. They basically have been on a downward trajectory basically ever since May of this year. And again, far less compared to 2021. Again, down 13.5%. But have a look at this. New listings are basically flat compared to last year, only down 1.4%. And basically ever since May of this year, the number of new listings has basically been flat compared to 2021. Because the blue line right here is 2021, the red line is in 2022. So again, about flat compared to last year's levels. But have a look at this, because new listings are basically flat compared to 1 year ago. However, pending home sales are down significantly compared to a year ago. But active listings have been increasing greatly basically ever since March and April of this year, been on a big upward trend and almost surpassing 2021's levels. So we're seeing this big increase of active listings, but we're seeing a decrease in pending home sales. So one would assume if we had a strong home buying demand, if we had more houses being listed for sale, we should be seeing more contracts signed. However, we're seeing just the opposite. We're seeing more housing supply hitting the market. However, the number of contracts signed have been decreasing. And if I had to guess, next week's housing market update, according to Redfin, is going to show active listings surpassing 2021's levels. Meanwhile, approximately 45% of pending home sales went under contract within 2 weeks. In other words, the home seller, 45% of the time, accepted an offer from a home buyer within the first 2 weeks of hitting the market. And this is down approximately 5 percentage points compared to 1 year ago, because 1 year ago, the share was approximately 50%. And meanwhile, approximately 32% of pending home sales went under contract within 1 week. In other words, approximately 3 out of every 10 houses sold very quickly. And again, ever since April of this year, the percentage has been decreasing greatly, and we're almost getting down to 2020's levels. Meanwhile, the median days on the market is at 18 days. Right now, 18 days. This is actually coming up from the all-time record lows that was basically set in May. I believe the all-time record lows was approximately 15 days. So we're coming up from the all-time record lows we saw from a couple of months ago. And the current levels right now are basically on par with last year. Again, approximately 18 days in the market. Compare that to 2020, for example, though. It took approximately, 42 days to sell a house. Now we're only at 18 days. However, though, this upward trajectory here, again, is a lagging indicator based on houses that have actually closed escrow. So it's going to be very interesting to see what this is going to look like at the end of this year. What has also been on a downward trajectory is the share of houses selling above their list price. We basically hit peak levels in May, when over 50% of houses sold above their asking prices, and now we're actually below 2021's levels. Right now, approximately 52% of houses sold above the list price, again, a lagging indicator. And as I mentioned in my previous video, approximately 6.9% of houses listed for sale have had price reductions by week. So in other words, approximately 28% of houses have had price reductions out of all the houses listed for sale right now, far higher than the past couple of years. I mean, back in 2021, we basically were at 3%, but now we're at 6.9%. And the better way to share this with you guys, because I already went over that in my separate video, is to have a look at this. Here's the percent of price reductions by week ever since 2015. And this is basically when Redfin started tracking this data. So take a look at this. Right now, by week, we're at 6.9%. Look at 2022 though, basically going straight up for price drops. So we're seeing a lot of price reductions right now because of sky high mortgage rates and of course sky high home prices. Also, the previous peak was set in October 2019 when only 5.2% had price drops by week. Now we're at 6.9% and basically going straight up. And meanwhile, approximately 1.9% of houses that sold over the past 4 weeks sold above their asking price. but this is actually less compared to 2021 at this time. And again, a lot of these metrics here I'm sharing with you guys today are showing a slowdown that's basically occurring in May, because look at this. The share of houses selling above their asking price, or the sale price to list price ratio, has been declining ever since May and basically been going straight down. And this is far different compared to 2021. And in 2021, we reached the highest levels basically in July of last year, but now we've reached levels back in May and has been decreasing ever since May. And again, like I mentioned in my previous video, the Redfin Home Buying Demand Index is down 15% year over year. This is a big decrease over the past couple of years, and this has been declining greatly ever since mid-April of this year. So what this is telling us is that Redfin is receiving fewer requests of home tours by home buyers. And that, of course, is an indication that home buying demand is decreasing. Also, if you guys got any value of today's video whatsoever, then please hit the like button. Greatly appreciate that. Hope you guys have an awesome day. Look forward to seeing you in the next video.